Tenaz Energy is growing again internationally with an acquisition in the Netherlands. We are joined by Anthony Marino, President and Chief Executive Officer at Tenaz. Thank you very much indeed for joining us.
It's my pleasure, Andrew.
Tell us about your latest acquisition in Holland, offshore. You're acquiring a natural gas asset.
Yes, we in May closed the acquisition of a pretty significant set of fields offshore Netherlands. Seller was a company called NAM, which is a 50-50 Shell Exxon JV. The production's on the order of about 10 to 11,000 BOED, but it's almost entirely European natural gas. Pretty high-priced product, 17 Canadian dollars per MCF right now, so very high cash flow. These are quite extensive assets that had been in the NAM portfolio their entire life, the last 45 years or so. And as a result of only having one owner, there's never been this big turnover and gush of development in it. In particular, NAM had very, very low reinvestment for the last 15 years, just drilling a couple of wells during that time. And so it leaves a great deal of opportunity for us to reinvest in well workovers, in development drilling, in exploration, in facility and compression projects to drive up production. We think at pretty low levels of capital investment. It's a low base decline, about a 10% base decline, and as a result of that, with the quite large amount of development activity that's available, we think we can drive up production organically at the same time that we're throwing off free cash. And of course, that $17 per MCF gas price helps in generating free cash. So
when you headed up Vermilion, of course, we remember Vermilion as an international company, quite diversified. But you've got with Tenaz, your new company, you've got a very heavy focus on European gas.
Our weighting today is about 85% European gas. The other 15% is split between oil and gas in Canada. We have a nice Canadian development project at Leduc, south of Edmonton, but it's small in comparison to what we have in Netherlands. We've been driving up production in Canada, and we'd like to do the same thing now with these new assets in offshore Netherlands.
So your stock symbol TNZ, and that stock's been going up lately, up more than fourfold in the past 1 year.
We've been fortunate with the stock performance. It's almost a 10x since the recap in the second half of 21.
And it used to be Altura, did it?
Yeah, we recapitalized Altura in 2021. That's where we got the Canadian project with really a change in strategy to primarily invest in overseas M&A.
Can you remind me, like Dutch natural gas production overall, how much of Europe's needs does it satisfy? Can you give us a ballpark?
It used to be a really significant exporter of gas when the Groningen field in the northeastern part of the country was producing. This is actually the largest field in Europe. There was seismicity created by that production, and as a result, the government called for NAM to wind down that production such that it's not producing at all anymore. Now, Netherlands imports something like 80% of its gas rather than being an exporter, and there's a real emphasis in the Netherlands to support the offshore industry, to ease permitting times, and they're pretty reasonable, I think, to begin with there, and to encourage investments such that production can go up in the offshore, because it's really almost the only game in town left in Netherlands for gas production.
I guess the Dutch are known for their efficiency, if nothing else.
It's a very high quality, very sophisticated economy. I think very good regulation, very strong rule of law. Netherlands is a great country, and as a producer there, I think it's really an ideal place for us to be.
This is a little off topic, but I think there was talk that they might convert some of their pipeline network in the Netherlands to hydrogen. I don't know if that's gone any further forward.
You know, they're pretty committed to the energy transition over time in the country, which is a good thing. Things like CCS and hydrogen and, of course, a lot of renewable energy in the country. And I think that the very, very long-term transition plan is to transport hydrogen onshore to various markets, and a lot of that hydrogen may in fact be produced offshore. It's kind of a tie-in to some of the assets that we had even before this deal in Netherlands on the pipeline side that could be used for part of that hydrogen transport. So I think it'll be a positive thing potentially for our company as well. You know, certainly the country is very committed to energy transition.
Sorry, how would you produce hydrogen offshore? You would use nat gas to break down water or something like that?
Well, it would be using offshore wind. That would be quite distant from the shore, where the losses in a power line would be quite high. So potentially a more efficient way would be to electrolyze offshore, create the hydrogen, and put it either into a natural gas pipeline, which we have some of these, even the assets prior to the NOM deal, and use that to bring the hydrogen to shore.
Your market cap, almost $500 million, according to my screen. Do you plan to pay a dividend in the near future?
It's always a possibility. Previous companies, we ran a pretty heavy dividend growth model.
Yeah.
We currently have a buyback program in place. And, you know, it seems like in the industry today, probably the better path, I think, for shareholders is to use the buyback. A dividend model, maybe for oil and gas companies, doesn't quite get the valuation credit that it used to in the past. And as a result, I think perhaps buybacks might be a better way to go. But we're going to have free cash, and it's certainly an option to have both of them. At present, we have the NCIB.
U.S. Natural gas trading at about $3.50 US right now. What's the equivalent price in Europe again, Anthony?
Well, if we put it into CAD terms, it's about 17, so 12 or 13 US per MMBTU.
Right. And why is it more expensive? It's just the cost of getting gas to Europe, basically.
Yeah, I mean, North America, whether you're in the US or Canada, especially in Canada, is sort of a trapped market with the exception of what comes off in terms of LNG. Many, many resource plays that can ramp up production. And so it's really kind of a depressed market here, although it's had better tone in pricing lately. And then to take that gas overseas, it has to be liquefied, a bunch of capex for that, limited capacity, has to be transported in tankers, has to be regassed, has to be transported in that end market. And these are all things that add up to the prices that we have today. Plus, there's a real competition for LNG cargoes between Europe and Asia. So Europe has to compete for those versus the Asian market that is similarly priced.
Is there any risk? I know you're not in the LNG business, but you've got a lot of insight. Is there a risk of an LNG surplus, a glut globally?
Yeah, I mean, it's hard to say. There will be LNG capacity that is going to be coming on over the next number of years. I think it's going to be required to service the growing gas consumption. I think there's a better prospect for increasing gas use as opposed to oil, let's say, over time. And there are significant costs involved in producing it, liquefying it, transporting it, and regassing it that leads to this higher price. So the prices are going to fluctuate. They've got upside and they've got downside as well. But I don't expect the kind of glut that would lead to a dramatic reduction in prices in the next few years.
Anthony, thank you very much indeed. Anthony Marino, the one and only in town. Great having him here. Anthony is President and Chief Executive Officer at Tenaz Energy.